Well, top of the morning to you. This is our Tuesday key market drivers call. It's September 24th, as I recall. There's our contact info on the screen. We'd love to hear from you, so let's just get after it here. We're just sitting here kicking it around before we hit the record button. And I think the general theme today is we got a lot of stuff going on here. Probably could have used the Bull Durham slide yet again this week. I mentioned that last week, but and to some degree or another, all these things that are coalescing together that are causing markets here of late anyway to go up. Yesterday, pretty much everything went up. Last week, corn and wheat was down. Beans didn't do much. Meal down, oil up. Got a big oil rally that I'll explain to our oil customers and anybody else who wants to listen here. I think I'll probably table that till we get to the veg oil slides. But I think part of the message here today is that there's just a lot of there's probably not one great big giant bullish thing. Like you can get this during the growing season when weather's bad. You got weather is the big driver. Today you got a lot of different things pulling on markets, I think. And we had a big rally yesterday. We were sitting around talking about that. I think with corn and wheat down pretty good last week, Scott, you made the comment that maybe just a little bit of a turnaround Monday, a day early for the turnaround Tuesday.
Yep.
I think the big reason that the thing that people wanted to talk about the most with the rally yesterday was this announcement of this big stimulus package in China. The People's Bank of China, the PBOC, is cutting interest rates, reducing reserve requirements for the banks, some additional support to the struggling real estate / housing sector over there. I didn't see any of the detail on that. And Nate, what was your headline you had on that?
Well, now I got to go back and find it. But
what wasn't it? Didn't you say like the biggest stimulus?
It was the largest economic stimulus package since the pandemic. And I don't know, I guess we've been talking about this for a while that, are things just not quite as rosy over in China as what maybe they like to say it is. I'm not accusing Chinese government of propaganda, but
I'm pretty sure they wouldn't do that.
But yeah, I mean, and I guess the comment that I made before we hit the record button is, this maybe was the catalyst for some of the market move yesterday, but could this turn into a longer tail on some of these things from a demand standpoint if all of a sudden people in China have more money to spend? Are they going to be consuming more things like food, and could we see maybe a little bit stronger demand for some of these ag products? I don't know, but
no, that's a great point. I mean, the reason that maybe China's soybean meal and bean demand has been a little bit slack is because, well, first off, they're buying a lot of it from Brazil, but they've got a pork sector that's struggling, and maybe spending for that goes up. That can drive a lot. That can drive all things ag when they're expanding their hog herd, which they haven't done in a while. So. You can see, you asked a lot of questions there, Nate, but all those questions, I think, is what the market, as we speak, is trying to answer while we consider this new piece of information, this new stimulus package coming out of China. So you make a great point. It's not only did affect markets yesterday, but it's likely to affect markets. This probably ain't done yet. It's probably not a Monday and done sort of thing. Now, how bullish it is and how long it is and how it manifests itself is yet to be determined. So we'll kick that around a little bit more as we get into it here. Got a big rate cut last week. I think it propelled our equity markets. The 401k update, as I call it on the Daily Wire, propelled equity markets back to brand new, fresh all-time highs again for the 80. I don't know how many freaking times we've hit that this year.
Can't count that high. But at any rate, that has put some pressure on the value of the dollar a little bit. So far, the U.S. dollar index seems to be hanging on to 100 by its fingernails. We haven't had a two-digit print instead of 3 in a long, long time. Hard to tell if that's coming or not. But I think the marketplace is also expecting 2 more 25 basis point cuts. So I think the general market opinion or more is we'll get, I think, a full percent, maybe 1.25% by Christmas. So I guess stay tuned to that. It's probably got more to do with your 401k than really commodity markets. But
an election,
a weaker dollar. Oh, that's right. We have an election to throw in here.
Right. We have an election.
Yeah.
But they're not supposed to do any of that.
I've been in this crazy commodity business for 40 years, and I keep waiting for stuff to kind of just slow down a little bit. I'm Guess it's not going to. We'll also update you on harvest. Kind of got that in full swing at this point, starting to get a little bit more information out of the harvest fields. It's still pretty early, but I guess we talked about those top two. Talk a little bit about harvest here. We're pretty much 14% harvested on the U.S. corn crop, 13% of the bean crop. Most of the big producing states, those 5 bigs that we talked about last week, are still single digits. But we're starting to get rolling. Now, I guess we'll get slowed up a little bit around here because it rained last night and it wasn't supposed to. Pretty sure it's going to be 1.8 degrees warmer 100 years from now, but this rain last night was not in the forecast at all.
Anywhere.
This is the rain. This is what we were supposed to.
Forecast.
No.
This is what we were supposed to get last weekend, Dave, that we didn't get, and then now it's just a few days late, right? I mean,
that must be it, because we were supposed to get 1 to 3 inches of rain this past weekend here, and we got. I think I had to round up to get to 1/10 of an inch of rain.
Right.
In my rain gauge. So anyway, I'm not trying to disparage meteorologists. It's a tough job because if I was disparaging them, they would be disparaging some of our commodity price forecasts, wouldn't they?
I'm sure.
Not an easy job. So anyway, Canadian rapeseed harvest. All provinces at least 30%. Remember, that's always a week old by the time we get it. So I suspect Canada is probably about the 50% mark.
Yeah.
You had a couple provinces in the upper mid 40s last week, and Alberta about 30, a little over 30. So,
and you can also add to that their spring wheat crop is a little bit behind ours, but certainly probably ahead of their rapeseed.
Yeah, so they're probably coming up on
75,
the 3/4 pole, something like that.
Yeah, probably.
So far things still looking good. Got a little bit of a summary for you on next week's small grain summary. That's Monday, right?
Yep.
We get our small grain summary for the wheat. We get our SEP1 stocks report for all commodities. That's the ending stocks for all the spring planted crops. So,
and it's the first one for wheat.
For its first quarterly stocks marker for wheat. So big report next week. I guess I got a slide here at the end, but we will be doing a beers in the back to kind of kick around what the USDA told us. So there's what the market's looking at. And I guess the message here, a lot of numbers, a lot of talk of feed and residual, which usually causes people's eyes to roll back in their head. So we don't want to get too far off into that ditch. I think the bigger message here, first off, is to give you the numbers that Bill is looking at. I guess we won't talk about next week. We'll have the report by the time we do our Tuesday call, but gives you some idea of maybe what the trade's going to be looking for on those quarterly stocks numbers. The other broader message here is all of those are larger, in the case of soybeans and corn, considerably larger than last year. That just tells you we're in this part of the cycle where, Mother Nature hasn't thrown us a big curve in a while. I hate to say that out loud. I guess I'll knock on the table. But we seem to be building stocks, getting back away from that ledge, if you will, of not having enough of stuff. So more wheat, more beans, more corn. Life is good until the next time Mother Nature throws us a curve. So here's the downdraft I was talking about. Corn down 2.8%. Remember, the corn market had rallied pretty good. We've talked about those so far, contract lows of 385 for D's corn. And we're set back at the end of August. Honestly, might have got out over our skis a little bit. I think we stuck our head above 415 a bushel and decided that, well, maybe 385 was too cheap, but 415 seems too expensive with the crop that we seem to have out there. I think we got a little bit of a bump for a couple things, a couple markets for a day or two there with, seems to be a bit of an escalation with the Russia-Ukraine war. Scott, you'll probably talk a bit more about that in wheat, won't you?
Sure. Yeah.
We'll talk about the weather for Brazil and what, I'm not sure we're ready to say it's a late rainy season yet. Maybe we could put that on our list of things that we may have to worry about later. That's probably a good spot for it right now. So there it is. There's the harvest results. Remember the big ice states I was talking about? Now, I guess you do have Illinois and Indiana at 14 and 12. Iowa's only 5% harvested. We're right at 10% harvested out here. Minnesota, you guys can't be very far into it, I would think. Nate, what, 4% it looks like across there? So yeah. We're just kind of getting ahead of steam up in the big producing states.
But they were going this weekend. and they'll
Yeah.
be going hard this week because we got a pretty clear week ahead of us too.
Yep. Well, we have a forecast for a pretty clear week ahead of us.
Good point.
I went out to get on my motorcycle to ride to work today, and it's like, oh crap, I'm gonna have to take the truck. Anyway,
there's some more of your downdraft. You see there across all three wheats last week, we were down a pretty good little bit, and that's a bit of going in the other direction from where we've been. But all three of those markets are pretty range bound, quite honestly, and they have been for the last, let's say, 60 days or so. We kind of hit our interim lows late August. We hit our interim highs, 2 weeks ago. So this market hasn't gone away and hid. But at the same time, we're right back up yesterday. So what's going on in the world? I think two things that's going on with this market. You see that things are kind of ramping up in the Black Sea. We've been hearing about that really for the last 10 days or 2 weeks. We blew up a ship, and then this guy threw a bomb at me, and I threw a bomb back at him. But again, none of that is affecting any of the wheat trade, river navigation, any of the infrastructure. It's the same old thing. I mean, we've been trying to talk about a bullish story in the Black Sea for 2.5 years, really, and it doesn't ever seem to really stick. So
one of our wires yesterday was kind of talking about that. They made the comment that this whole what's going on in the Black Sea hasn't really worked for a while, but we're going to try it again.
We're going to keep trying it until, and don't get me wrong. It is a bullish input. If something big were to happen over there, it could definitely affect not only the price action, but it could really affect the global balance sheet.
Yeah.
So
is it a little bit of the little boy who cried wolf thing though? Because we kind of got snookered a bit here 2.5 years ago when all this stuff got started, and we were convinced we weren't going to have enough to eat, and the market
and it hasn't changed.
That. Yeah.
It really hasn't changed. So the other big story that Dave mentioned, and we talked about the stocks, but the other big piece of information that we'll get on Monday in the USDA report, along with the SEP1 quarterly stocks report, is that we get our final production numbers on the wheat crop, on the total wheat crop. We'll get those final numbers on Monday. Bill did not take a crack at that in his analysis. I really haven't taken a crack at it either, although I would say my gut tells me that it wouldn't surprise me at all that we see a larger wheat production than we saw on the September WASDE. We have a chance to go back up over the 2 billion mark on total production. We're sitting at the 198 level right now.
Come on,
20 million bushels wouldn't really upset the apple cart, but we'll see that on Monday. So that's really the other thing I think the market is kind of waiting for. It's a pretty good sized report for wheat, and I think you mentioned it earlier on the slide.
It's the most important.
It's ranked fourth for both wheat and corn. So pretty good sized report.
All right. Well, thank you for that.
Oh, I forgot. So through this in here, this is U.S. Wheat Associates. I refer. I know it is a lot of numbers. If you've got your photographic memory, take a quick picture. But U.S. Wheat Associates is a company that does a lot of analysis on the total crop. So there's your three big classes: hard red winter, soft red winter, and hard red spring. I'm not going to go through those numbers and simply say that it was a good crop this year. It was a good crop in both quality and quantity. And we'll see we'll see about that quantity next Monday. I was a little surprised in the hard red winter wheat to see higher proteins this year, mainly because we had such a good growing season. Usually that means you have lower protein because the plant is not stressed. And I would say the same thing about soft red winter wheat, a little higher than expected protein. We did see that, however, on the hard red winter wheat. The protein was a little bit lower. And again, I attribute that to the very good growing conditions that we had in the northern plains this year. So I'll leave it at that. If anybody has any questions, give me a jingle.
Switching gears here to the soy complex. Beans didn't do much. We've had this bit of a rally here. We talked about all the flash sales. We've gotten some more. I've got, I think, a couple more listed there that I've seen recently. One of the latest, 165 yesterday to our initially reported as China, but then they apparently said, oh, I guess we weren't supposed to say that. We sold it to unknown, but probably China really doesn't make a whole lot of difference. But I think that continues to support the market. Seem to be running out a little bit of upward momentum here. The soybean market kind of stalled, but look at that bean oil rally. What the heck happened to veg oils? I'm going to show you here in a minute. Palm oil was up $60. Matter of fact, I'm just going to go to the veg oil slide right now. We'll kind of talk through it. Palm oil was up $60. Canola seed, look at how much canola seed ran up. Now you had a huge spec short there that we had some short covering, but called a good buddy of mine and that I know is very focused in the veg oil markets. And I said, look, I understand that I see some of the bullish inputs out there, but how in the world were we up 6+%? I see some of the bullish inputs. None of it looks like it's worth that big a rally. And I think his commentary to me made a lot of sense. He said it's not necessarily one big thing, but it's maybe a whole lot of little things that have caused this. And the list that I was writing down as he and I were talking, I think the latest, at least chronologically, is you can see there we got SPOMA, Southern Miller's palm oil production in Malaysia for the first 20 days of September down 7%. Oh my God. Well, that's down because it's raining like hell. All that fruit gets harvested manually. And so when it's wet, when it's muddy, it's harder to get the fruit off the trees and into the mill. So production is down. Doesn't mean we've lost that palm fruit. It just means that it's out on the trees a little bit longer and it's going to take them to get it. So theoretically, when the weather clears, we should get that production back.
But, and it doesn't affect the quality at all.
Well, for a while it doesn't. I mean, if it stays out there too long, you'll see FFAs go up a little bit, but I don't think anybody's talking about that yet. So that's kind of the latest bullish input. We talked a little bit last week, but it's still happening. Petroleum's back up. Why is petroleum back up? Well, several reasons. One of them is the China stimulus, which is another thing that's kind of lifted all boats. We've talked about, it's kind of old news, but we've talked about the B50 talk in Indonesia. We've talked about these fears of lower production in Indonesia, which I don't know that there's going to be too much to that either. Those have been market knowns. We talked last week about that very low NOPA soybean oil stocks number that I tried to put in context for you last week. And on top of that, you throw in a little bit of spec short covering and some big stimulus package in China, and voila, you have a nifty little rally in the veg oil market. So is it going anywhere? Well, I've been a little bit suspicious of this rally on palm oil for quite a while, but it continues to hang on. And at least now the bulls have hold of this market. India did their part to try to break the palm oil rally here. You can see on that fourth bullet down, Indian buyers came in and canceled about 100,000 tons of OND palm oil purchases. Now, to give you some perspective, India imports about 750,000 tons a month. So canceling 100,000 tons across 3 months, it's not exactly a drop in the bucket, but you know, it's not good news. So so far the palm oil market kind of said, we're going to keep going up. So we'll see how long this goes.
Is part of this just that the market is just kind of wanting to be bullish? I mean, and so we see all these things that on their own normally we would look at it, like the NOPA crush report. How many times over your career have we gotten a NOPA report that the number just looks a little bit odd, and we come back a month or two later and you know, it's like, okay, that's what happened. There was a typo or there was an error in it, or you know, we get the USDA crush number at the end of the month and it doesn't line up with the NOPA number. But it seems like this month, for whatever reason, we have all these little things going on and the market just looks at each one of them and says, oh, that's bullish and that's not bearish. And I don't know.
Yeah, and I think some of this is certainly palm oil led. And I tell you what, that's probably a great segue into this slide. Now, we've been telling you for a long time that because of the renewable fuels program, North American veg oil prices are an island. You could see it here. A year ago, we were in excess of 10 cents a pound higher than every other veg oil everywhere else on the planet. The green line is soybean oil futures. The blue line is palm oil prices. And you can see that they have intersected. And what that means is when soybean oil futures were 7 miles above the palm oil price, movements in the palm oil price didn't necessarily correlate well with movements in bean oil. That's not what we were trading. We were trading the renewable fuels margin. Now, when they're back at parity or close to parity, now when the palm oil market rallies, it'll have a tendency to shove bean oil up with it and vice versa. So I think we are back probably at that point in time where these two markets are going to correlate quite well, as they have historically. Obviously, we're out of correlation pretty well back here because we didn't need to correlate. We do. So I think palm oil rally is probably some of what we're seeing in the bean oil markets as well. So a lot of stuff going on here, a lot of things that we really haven't had to worry about the last 2 or 3 years with veg oil prices here above everybody else. Well, now we're kind of having to back and look at palm oil prices a little bit more closely as an indicator for soybean oil futures prices. Having to watch the veg oil the export markets for soybean oil. Haven't really exported a lot out of the U.S. yet, but we're as close as we've been in years to that world export market. So we will see. We will see where all this goes. So, Scott, you want to take us through the dairy side of things this week?
Well, yeah, things are a little bit better, a little bit.
Are you suggesting that Jay is not reporting to us on dairy this week, and you get to report the first price declines? And
I don't know how. Right? How did I get to that job? I'm not sure, but yeah. So we got a milk production report on Friday. And it was seen as bearish, and I was just kind of watching out of the corner of my eye, saw a little blurb, and it said, milk production down. It was down 0.1%. Bearish.
0.1%.
And I went, wait a minute. Production is down, and we're going to be bearish on this? Well, production was less. As
it was expected to be down more.
Correct.
Less more or more less?
Less. I would say less. So yeah, it would seem that we're starting to see some expansion in different areas. California was actually up, and so you're starting to see at a minimum, you're starting to see a slow down of the decline, and you're starting to see some expansion and some adding of some cows in different areas, and so that's why the marketplace is starting to feel a little bit better. When you look at the different products, cheese is kind of stubbornly kind of hanging in there. And it's driven, I think, by two things. Jay was telling me this. Europe has got this black tongue, it's easy for me to say, black tongue disease. It's in the sheep, and it's kind of like our AI in poultry a little bit. It kills the sheep. It causes the cows to get sick. The cows get sick and the production goes down a little bit. And so their milk production is down a little bit. Our cheddar production is lower. And part of that has also been driven with this lower cheddar production. There was a tender for U.S. To buy up a bunch of barrel cheese for SNAP stuff. And I think that kind of took the market a little bit by surprise, and now you've got the barrel and block prices inverted a little bit. Okay, but we've got the newer production down in Texas and Kansas that is kind of starting up, and we should see more of that as we go into the fourth quarter here. And then on butter, look at butter; we're below $3.
It's been a while.
What a crazy thing! The inventories are better. Your multiples have begun to move lower. You're kind of through that back to school push on all the not only the fluid milk, but also the butter. And so the butter markets are feeling a lot better. And we get another cold storage report on this Friday coming. And again, the marketplace is kind of hopeful that we get another good mark or another good number for the butter storage. And so maybe, just maybe, those high prices for butter are in the rearview mirror.
We don't want to scare it off.
Right. Now, we're not talking about, and Amy at AES is not talking about any type of, 250 or 260 butter as we go into Q4 or next year. But we think that we could, I think you and Jay talked about our new targets around 290, 295.
Well, starting, yeah, that's where we'll start anyway.
Don't sleep on this. This is a break, and we think you probably ought to put something to bed here.
Yep. Well, thank you for that, Scott. I will did want to show you the spec sheet, I guess, before you go any further. This is third or fourth week in a row where we've had some pretty significant spec buying, kind of across the board. This is old news. I think we're going to find out that the spec bought a chunk of that back in. That's why we had the big rally last week. But remember, this is only through close of trade last Tuesday. So this is a week old. You're going to see some green here next week. You're going to see some green here next week, I suspect. But you can see that the size and magnitude of the buying has slowed. I think the spec has gotten back to much more manageable positions. So I think that's maybe why this upward momentum, we've kind of run out of upward momentum now. We talked here at the end of late August, kind of market seemed, at least for now, have to run out of downside momentum. Well, it almost seems like this rally is kind of running out of gas here just a little bit. We'll see, I suppose. Harvest forecast at this point, I would argue rain makes no difference whatsoever to the crops. We don't have anything around here that's green anymore. It's all getting, at some degree, getting ready for harvest. Got some rain, the latest Gulf storm track. I'm not sure if that's a hurricane yet, but it's going to slow things down in the eastern corn belt. But you can see things warm up, things dry out. Got a little bit more rain. You can see that storm track, I think, expanding into the 6 to 10 day, but then it starts to move east and looks like a pretty decent harvest forecast here. And I think when you look to South America, you can see a little bit of rain starting to creep in here to the north and the west. If you look at the 6, 10, and 8 to 14 day, I think I've been telling you for 3 weeks now that if we get to the beginning of October, and the maps are still got a lot of white on them, then it will be time to panic. Well, that'll be our Tuesday call next week. But you can see the 14-day, you're starting to get a little bit of rain, a little bit further south, a little bit further east, and hopefully that's a good sign of things to come. So,
one quick note on winter wheat. We had a decent week of rain in go back to that last week slide. There, look,
there you go.
Yeah. So look at that, some nice greens, inch and a half type rains across Kansas and Oklahoma panhandles. That's really good, just with the doctor order, because it does turn off and go dry here for the next couple of weeks. But that's all good right now.
Yeah, no, excellent point there. And there is the beers in the back. We will be doing that. You can subscribe to our YouTube channel. We will be doing that probably early afternoon next Monday for the stocks report.
Yeah, so I can't remember if she set that up for 2 or 3 o'clock, but if you don't
watch it live anyway.
Yeah, if you don't watch it live, certainly we'll have it that you can go out and we'll send it out to everybody, but you can see it on our YouTube channel.
Looks like she has it scheduled for us to record at 3 p.m. Central, so people won't be able to see it before then.
Perfect. All right. Well, that's what we got for you this week. Hope it worked out for you. Thanks for everybody for chiming in there, and be careful out there.